NVIDIA is currently standing at a critical crossroads that most investors are completely misreading. While the headlines are screaming about volatility and the potential for a massive market pullback, the underlying mechanics of the AI sector and NVIDIA's dominance are telling a very different story. We are seeing a massive divergence between the fear-mongering bubble talk and the actual institutional rotation that is keeping this stock afloat. If you think the party is over just because we've seen some choppy price action, you are missing the bigger picture of what Tom Lee and other top strategists are seeing in the macro environment. The reality is that the fear of a 20% bear market is exactly what might fuel the next leg up for NVDA, as it remains the undisputed king of the growth index that the world's capital is currently fleeing toward. The market is currently wrestling with a complex set of variables: rising oil prices, fluctuating inflation data, and a shifting sentiment in the software and semiconductor space. For NVIDIA, this means the stock is no longer just trading on its own merit. It is trading as a proxy for the entire US technology growth story. When oil prices spike, it traditionally signals a drag on the economy. But in the current landscape, the US has transformed into a net exporter, meaning higher energy costs actually strengthen the relative position of the US economy against global competitors. This creates a vacuum where global capital flows out of international markets and directly into the most liquid, high-growth names in the S&P 500. NVIDIA sits at the very top of that list. We are seeing a safe haven shift into high-margin tech, which is a structural change that many retail investors are failing to account for in their risk models. To understand where this is going, we have to look at the perspective of one of the most consistently accurate bulls in the game, Tom Lee from Funstrat. He recently appeared on CNBC to discuss the broader market trajectory, and specifically why certain growth sectors are bottoming out despite the looming threat of a bear market later this year. His analysis provides a crucial bridge for understanding why NVIDIA might continue to outperform, even if the rest of the economy starts to feel the squeeze.
You know, our take is we do expect that decline to happen when markets don't respond to good news. So I think we're in a period where we had a bear market already in software, the Mag 7, and in crypto. I think that's already taken out a lot of speculation. So to me, I think our bet would be markets are actually going to lift through the end of the month, that we're going to actually be positive for March and maybe hit 7,300. Later in the year is when we think a bear market might show itself.
What about oil? Right, we're watching it so closely. We're driven by headlines, some of which are apparently erroneous. I don't know what do you do with that?
Yeah, I mean, it's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil. But if I look back at the last 2 days, oil's $15 higher than it was last week, but the S&P's higher. So to me, the market actually is handling higher oil prices better. And, you know, we wrote in our note this morning that we think higher oil prices are actually good for the U.S. stock market.
Yes.
What Tom Lee is breaking down here is essential for any NVDA shareholder. He is pointing out that the multiple compression, which is just a fancy way of saying the stock price relative to earnings has come down to more reasonable levels, has already happened in the tech sector. For a long time, the bear case against NVIDIA was that it was too expensive. But if the industry is now trading at multiples that reflect a cyclical bottom rather than a speculative peak, the risk-to-reward ratio has shifted dramatically in favor of the bulls. Lee's point about the US being a growth index means that when global growth becomes scarce, investors don't just go to cash, they go to the companies that have durable businesses. In 2024 and 2025, there is no business more durable or more essential to the future of the global economy than NVIDIA's AI infrastructure. Now, let's look at the price action. NVIDIA has been consolidating, forming a base that has frustrated day traders but encouraged long-term institutional holders. This consolidation is happening while the broader market is terrified of a 20% drop. If we take Tom Lee's base case, that we might see a bear market later in the year, we have to ask, what happens to NVDA in that transition? Historically, during the early stages of a market-wide correction, the strongest alpha generators are the last to fall and the first to recover. Because NVIDIA is the primary engine of the AI revolution, its earnings reports aren't just corporate updates, they are macroeconomic events. The recent price action suggests that the market is pricing in the negative risks early, exactly as Lee described for the software sector. This means the bad news of higher interest rates or energy costs is likely already reflected in the current price, leaving the door open for an upside surprise. The deep dive into NVIDIA's current valuation shows us that it is becoming a defensive growth play. That might sound like an oxymoron, but in a world where software multiples have pulled back and Bitcoin is being used as a store of value alongside gold, NVIDIA occupies a unique space. It provides the hardware that makes the software possible and the compute power that makes the digital economy function. When you look at the chart, you see a stock that is absorbing selling pressure with incredible resilience. Every time it dips, it gets bought up by institutions that realize there is no alternative to NVIDIA's H100 and Blackwell chips. They aren't buying the stock because they are gambling. They are buying it because it is the only place left to find legitimate double-digit growth in a stagnating global environment. We also have to consider the broadening trade that everyone has been talking about. Many analysts expected the market rally to spread out to small caps and value stocks. However, as Lee noted, if oil prices stay high and growth remains scarce, that broadening trade might stall. This is actually a bullish catalyst for NVIDIA. If the rest of the market can't sustain a rally, the capital has nowhere else to go but back into the winners that have already proven they can deliver. We are seeing a concentration of capital back into the Mag 7, with NVIDIA leading the charge. This isn't a bubble, it's a flight to quality. The market is distinguishing between companies that might use AI and the one company that is actually selling the AI. As we move through the rest of March and into the second half of the year, the key level to watch for NVDA is how it handles the psychological resistance near its all-time highs. If Tom Lee is right and the S&P 500 pushes towards 7,300 before a bear market hits, NVIDIA will be the primary horse pulling that carriage. The volume profile shows that there is a significant floor established by institutional buyers who are more than happy to pick up shares from retail investors who are panic selling based on short-term headlines. The volatility we are seeing is the cleansing of speculation that Lee mentioned. It's getting rid of the weak hands so that the next leg up can be supported by solid fundamental conviction. To summarize the situation, the macro environment is confusing, oil is up, and there is a bear market threat on the horizon. But NVIDIA is not a normal stock. It is the heart of the US growth index. As long as the US continues to outperform the rest of the world on a relative basis, and as long as AI remains the top capital expenditure priority for every Fortune 500 company, NVIDIA remains the most important stock in the world. You have to look past the daily noise and understand that the bottoming process Tom Lee described for software is the precursor to the next massive expansion in semiconductor demand. The main takeaway for today is clear. Don't let the macroeconomic fear-mongering distract you from the structural shift toward US growth. NVIDIA is the ultimate beneficiary of a world where growth is scarce and technology is the only solution. Whether we hit that 20% bear market in 6 months or not, the companies with durable, essential businesses will be the ones left standing, and NVIDIA has the most durable moat in tech history. Before we wrap up, I want to hear from you. Tom Lee thinks the market will move higher in the short term, but faces a major correction later this year. If the S&P 500 drops 20%, do you think NVIDIA will follow the market down, Or will its AI dominance allow it to trade completely independently? Let me know your price target for the end of the year in the comments below. If you found this deep dive helpful, make sure to hit the like button and subscribe to the Stock Stalker for the most objective, data-driven financial research on YouTube. We are tracking these institutional moves every single day so you don't have to. Stay disciplined, keep your eyes on the data, and I'll see you in the next one.